everyone, and welcome to the virtual roadshow of Rajputana Industries Limited. I am Vaishnavi Vaiti from Kirin Advisors. Today, we will provide a brief overview of Rajputana Industries Limited. Rajputana Industries emerges as a prominent player in non-ferrous metal recycling sector. The company offers a diverse array of products primarily crafted from copper, aluminium, brass, and alloys. It sources scrap metal from open markets and employs an in-house manufacturing unit to transform these materials into premium products. Over the past years, the company has outgrown itself into the distinguished large-scale organization specializing in non-ferrous metals. From management team, we have Mr. Naseem Sheikh, whole-time director. Hello, sir. Good evening. Welcome.
Very good evening, Vaishnavi. How are you?
I'm good, sir. How are you?
I'm good.
We also have Mr. Ashok Hulani, director of Hulani Consultant Private Limited. Good
Hello
evening, sir.
everybody. Good evening. Hello everybody.
Yes. Thank you. Now we will play a short video of the company.
Welcome to the world of Rajputana Industries Limited, a pioneer in recycle of non-ferrous metals, founded by the visionary Mr. Sheikh Naseem. Since our inception in 2011, we have grown into a trusted name in the industry, delivering excellence in every product we offer.
Welcome to the world of recycling and metallurgy. This is Rajputana Industries Limited, a subsidiary of a listed company named Shera Energy Limited. I am Sheikh Naseem and I am the promoter of this company.
At Rajputana Industries, we take pride in our extensive range of non-ferrous metal products that cater to diverse industries and applications.
Rajputana Industries has grown over the years and added value to its product. It has made a mark in the domestic market. Now, as a team, we are ready to enter the overseas market and make global footprints.
Let's explore our offerings and witness the precision and quality that sets us apart. Introducing our copper and brass billets, made through superior semi-continuous and continuous casting processes. Our copper billets offer exceptional conductivity, while our brass billets boast excellent strength and corrosion resistance, with a range of 70 mm to 200 mm. These billets provide the versatility and reliability you need for your precise applications.
Rajputana is a pioneer in recycling of non-ferrous metals. It commenced its production in 2016. Company continuously added various products to take its sales from 15 crores to over 326 crores recently.
Unlock the potential of your designs with our extrusion-made copper mother tubes and brass rods. Engineered to the highest standards, their precise thickness, achieved through our advanced 2200 MT press, ensures consistency and reliability.
We expertise in recycling and refining of electrical waste. Our team has experience and expertise for segregation of various scraps to make suitable alloys. Company has successfully made an alloy suitable to make bullet shells, which are mainly used into defense sectors.
Experience the pinnacle of quality with our wire rods of aluminium, brass and copper, offered in variety of shapes like coils, square, round and hex. Backed by our cutting-edge upcast machinery, specifically designed for aluminium, copper and brass wire rods. We ensure precision, quality and versatility in every product. Brass wire, renowned for its strength and ductility, are available within the range of 1.2 mm to 25 mm. Finds applications in diverse industries, from electrical systems to bullet shells, zari, CNC machinery and zipper industry. Our brass wire plays a vital role.
At Rajputana Industries Limited, we transform raw materials into finished goods by recycling all type of non-ferrous metals like aluminum, copper and brass. To reduce carbon footprint, we have replaced all conventional fuel-fired furnaces with electrical induction-based furnaces. We have young and energetic workforce guided by a team and highly experienced metallurgists and engineers.
Continuing our journey, we specialize in the production of bus bars. Our aluminium bus bars and copper bus bars, available with the width ranging from 10 mm to 160 mm, are manufactured with utmost precision, offering excellent electrical conductivity and thermal stability. Our range of super enameled conductors includes both SEM aluminium conductors and SEM copper conductors. These high-performance conductors facilitate efficient energy transmission, powering motors, transformers, and various electrical devices. We are also excited to announce our latest expansion and diversification to production of DC cables for solar plant, submersible cables, house wires, and signaling cables for railways, further expanding our portfolio.
It is our privilege to announce new investment to manufacture electrical cables. Company is investing approximately 20 crores and its focus will be to cater the needs of solar plant, railways and power distribution utilities.
Over the years, Rajputana Industries has achieved significant milestones, marking our unwavering dedication to quality and innovation. We take pride in all our offerings and have a solidified commitment to quality, as we hold ISO 9001-2015 certification for our quality management systems, ISO 14001-2015 for environmental management system, and ISO 45001-2018 for occupational health and safety management system.
Reusing and recycling is the future in years to come. We as a team are committed towards creating a sustainable and an eco-friendly recycling industry which is guided by the principles of waste minimization, resource conservation and enhanced pollution control.
With a highly skilled workforce of nearly 90 dedicated individuals and a production capacity of 9,860 tons annually, we strive for operational excellence to meet the growing demands of our esteemed customers.
To reduce the cost of operations, company intends to set up a solar plant with a capacity of 3 megawatts shortly.
In our commitment to green energy, we have installed a solar power plant of 1 megawatt to reduce our carbon footprint and have planned for further 2 megawatts to be installed in near future.
Rajputana as a team has grown fast in learning and adopting the latest technologies of metal casting and extrusions.
Rajputana has also been awarded for excellence in non-ferrous metal recycling by the Cabinet Minister of Rajasthan and Bharti Udyog Leadership Award by All India Achievers Foundation. Our passion for excellence drives us to deliver the best products and services.
I take this opportunity to thank all my suppliers and my customers to be part of our success story. Thank you.
Rajputana Industries Limited, where precision meets excellence and quality is never compromised.
Thank you for watching. Now I hand over to Naseem sir to give us more insights about the company and its future plans. Over to you, sir.
Good evening, friends. I welcome you all in this virtual show. I am Sheikh Naseem, the whole-time director in this company. And this company is a recycling company, recycling waste into values. So we started our operations in 2014, and we had been recycling all our scraps generated in-house by our promoter company, that is Shera Energy Limited, which is again a listed entity. And we used to recycle all the scrap that was there. Going forward, we feel that the value additions in this was not that much. So to increase our value additions, we started developing the alloy-based business, on which a team of metallurgists were working very strongly on that. And fortunately, we succeeded, and which you can see in the results that we are catering over more than 10 set of industries, not 10 numbers of industries, 10 different kind of industries. So we produce all varied brushes of copper, aluminum, as well as in brushes. So they have a huge uh, applications across the industry. We are a B2B supplier. Our product goes to the major industries where they convert it into their finished products, and then it is sold to the retail market. So we have recently developed the alloys suitable for the brass, for the bullet shells, and we are doing extensively a good business onto that also. And in future, that business is going to go great. Coming down to reduce our cost of operations, uh, company intends to invest into the solar plant. Our vision is to do an investment of roughly 3 megawatts. Starting from 1 megawatt, we will gradually develop the solar plant capacity up till 3 megawatt, which will give a substantial saving on our energy bills, and that will help us to improve our PAT margins and have good valuable returns for our valuable investors. Going forward, the company is further investing into a cable plant where we are intending to manufacture the cables suitable for the solar panels. They are called DC panels. Very few players are there in this segment, and it's a huge potential market. We have identified that market. The building work, the civil work is almost done. We are about to commence the installation and commissioning of the machines, and by September, hopefully, we'll be through with all our capex investment. After that, we'll be applying for ISI license, and I expect in 3 months down the line, we'll be having the suitable ISI license to supply these cables to the all upcoming solar projects. Further, we will be making the cables for railways, where RDSO approval will be required, and company will be doing post all our machineries are done. Recently, we have invested into a subsidiary of Shera Energy into Zambia, where we will be procuring the raw materials. We will be bringing around the copper blisters and aluminum ingots from that area, which will be a commercial viable decision for our company. And that business is supposed to start by end of this quarter. And we expect a substantial growth into our bottom lines using the value addition chain into the African market. Recently, we have already also fetched the orders from African market to supply the conductors to that part. And first consignment of that conductor is almost ready, and hopefully it will be shipped in a week's time from now. So I welcome all the investors to come up with a strong participation into our upcoming IPO. Support us by putting up your money and your confidence, and I'm sure and confident that we will be able to deliver all the investors with a good returns. Thank you.
Thank you, sir. Now we will start with the company presentation.
Thank you, Rasimji, for a good feedback about the company and about the friends. I'm Ashok Holani, Director Holani Consultants Private Limited. We are a lead manager to this issue, Rajputana Industries Limited. This is our second issue of the Shera Group. Earlier, we did IPO of Shera Energy Limited for this group in way back in February 2023. The issue size was 45 crore and it was successfully done, and the stock is trading at a very good level since the performance of the company has gone many miles since the IPO. In the series, we have come up again for raising funds for our client, and this Rajputana Industries Limited is an IPO which we are launching. The total issue size for this IPO, the fund raised in this IPO is 26 crores, which, which will be raised via pre-IPO offerings and the IPO offerings. We are happy to inform you that we have made a pre-IPO placement of 6 lakh equity shares at a price of 38 rupees and already raised 2.28 crores. So the net issue as per SEBI guideline has been reduced to the extent of the pre-IPO placements done by our company. So the net issue size is 23.88 crores. The issue will open for subscription tomorrow, that is 30th July, and will closes on 1st of August 2024. In this issue, we will be offering 62,85,000 equity shares after deducting 6 lakh equity shares which we have already offered in the pre-IPO. The price band for this issue has been fixed between 36 to 38 rupees per equity share of face value rupees 10. The issue will be listing on the emerge platform of NSC Limited, and the tentative date of listing shall be 6th of August 2024. In this IPO, we have allocated the share into various categories which are very much known to every investor. But in this IPO, there is one special category which we have kept for our investors, that is shareholder category. To reward the existing shareholders of the Shera Energy Limited, which happens to be the promoter of Rajputana Industries Limited, we have kept a reservation quota of 3 lakh equity shares out of the total shares offered by us in this IPO to be subscribed by them only. So the 3 lakh shares have been kept in this reservation quota, and the lot size or our IPO shall be 3,000 equity shares. So overall, 100 lots are available for the shareholders to grab in this IPO. The price shall be 38 rupees. Other than the shareholder quota, which is tantamount to 3 lakh shares, the other category shall be the employee reservation that amounts to 30,000 equity shares. The retail category is around 20 lakh 10,000 equity shares. HNI category is 9 lakh equity shares. The QIB category 10 lakh 74,000 equity shares, and the anchor bidding is 16 lakh 11,000 equity shares. I am very pleased to inform my investors that the company has already received the bids from the anchors in overwhelming numbers, and the company has allocated 16 lakh equity shares to two fund houses as per the decision of the board meeting held by the company today. So now the anchor bidding has been closed and the company has successfully done that. Now the issue will open for normal bidding from tomorrow onwards, and the shares which will be left in the QIB bidding will be only 10 lakh 74,000 equity shares, which shall be bid by the fund houses according to their appetite. Friends, the total shareholding of the company shall be, as of now, before going into the IPO, the promoters and promoter group hold 95% of the company equity total holding, and 4.24% is held by the public. But during the course of IPO, since we are issuing the fresh shares, there is no OFS in this IPO. The holding of the company after this IPO shall be 66% of the promoters and promoter group, and 33% will be held by the public after this IPO, including the pre-IPO allotments. The market cap of the company, if we take a upper band price of this company, will be 84 crore rupees. Now, I will take you through the company details, financial numbers, and the management, so that we will help you in making the decision whether to invest in this company or not. As Mr. Naseemji already told you, the Rajputana Industries is into the business of recycling of the scrap of aluminum, copper, and brasses and converted into the premium quality products. This sector is in very demand. Industry is growing rapidly year-to-year basis, and company being a major organized player in this sector is bound to grow in future. The key facts about the company is into this trade from last 10 years, doing phenomenally good. The company has a team size of 80 persons, including the admin staff, production staff, sales, marketing, everything. The company as of now is catering or manufacturing 12 type of different products, which I will explain in detailing later. And the products manufactured by the company are usable or used in more than 10 industry segments of different repute. The total capacity of the company plant to recycle the scrap into the premium products is around 9,860 metric ton. The company is also doing fairly good on the financial front. In FY 2024, the company clocked down the turnover of 326 crores, earned a EBITDA of 18.15 crores, 15 lakhs, PAT of 5.12 crores, at a very good healthy run rate of 17% of ROE and 30% of return on capital employed. So these numbers suggest the company is doing fairly good in terms of financial numbers, and we hope the company shall continue the same trend in the future. We will straight away go to the product portfolio and the quality of the good. Next slide, please. Next. Yes. The company is, I already told you, this manufacturing the premium products by converting the scrap into the premium products. They hold all the licenses required for the quality production, quality maintenance. So as of now, the company holds all the ISO certification quality like 2015, 2018, and ISO 14001 also. Similarly, as I told you in our introduction about the key facts of the company products are required in more than 10 industries. So these are the industries which are the principal buyers of the products manufactured by the Rajputana industries. The major industry is electrical industry, plumbing industry, construction industry, aerospace, power generation, renewable energy, HVAC. So if you see these industries, they are covering each and every part of our life cycle where we require the products on a daily basis. Because the copper and aluminum are such a products which are required by everybody in their daily space of life. These are the glimpses of the factory of the Rajputana Industries, which is located in the Rajasthan, and the company factory has been situated on a RICO land in an industrial land allotted by the Rajasthan government via their vehicle RICO. The company owns them for the leasehold land for 99 years, and they have built their own manufacturing facility where they are manufacturing these products which the company is manufacturing. The total capacity of the company is 9,800 metric tons. And since I told you already, the company is manufacturing various type of products. So we have bifurcated our products into three basic categories: all type of aluminum products, all type of billets, all type of copper products, and the brass products. So every type of products has been require different processes. So company has a different capacity for every type of manufacturing. So as of now, on an average, the company has a capacity of 55 to 60% of the production has been utilized by the company, and with the induction of more funds via this IPO in the company is planning to enhance its actual utilization much more than what they have achieved in FY 2024. Before going into the detail, the most important thing is the management who leads after the company. The company is blessed with so many persons of a repute, of engineering background, of a financial background. So the company has a board which has been comprising of technical side and the financial side, so that business of a company, including the corporate governance, reporting, is done on a fairly transparent manner. So the company is headed by Ms. Shivani Sheikh, who happens to be the managing director of this company. She is a by education engineer, holds electrical degree. Similarly, the company is ably supported by Mr. Sheikh Naseem, who is also have experience of 26 years in this particular trade, and he also by education an engineer. These two are supported by Mr. Sudhir Garg, who is a non-executive director in the company, also holds a bachelor's degree in science and master in arts economics, helps the company in drafting the corporate governance, maintaining the highest standards of integrity, transparency, and financial prudence. These have been supported by the three gentlemen who happens to be independent directors. All are of a good education background. They happens to be company secretaries and LLP. So the company has every type of person on their board to guide them for future growth. Business of the company is very simple. Company is buying the scrap from the open market, from their dealers, from their customers, from import, from domestic market, taking this scrap from everywhere which is available. Then they reprocess them, they segregate them, and use them for making the premium products. the projects the products which are acquired by the company are converted into the premium product by this process which we have outlined, the manufacturing process of the company for converting the scrap into the finished products. Next, please. Next. So these are our product lines which are manufactured by our company from that particular scrap. We manufacture brass rods, copper rods, aluminum wire rods, copper billets, brass billets, brass wires, copper mother tubes, super animal wires, conductors, aluminum bus bars, copper bus bars, bullet shells. So overall, there is a good portfolio of the products. If there is demand in one product, the company manufacture them. If demands other product, the company has a variety of products. So if let's say demand in copper is high, then they will stop production aluminum, they will focus on the copper. If they see that there is demand in the aluminum, they shift their production process into the aluminum. If they have brass demand, so company caters to different categories, so maintain to understand the industry economics, and they always able to maintain their figures what they have projected, and they have attended the same in the past. The revenue breakup: the last year company did a turnover 326 crores. All the revenues of the company is coming from the domestic market, because as such there is a huge demand of the products of the company manufactured by them in the Indian market. So company first wants to absorb the Indian demand, thereafter will planning to go for export. But as of now, there is no export in the business. As I already told you, industry is in huge demand, because in everyday life, copper, aluminum products are basic necessity for everybody. So industry is going in a fairly large number, and since this industry is majorly comprised of unorganized players, there are very few players like Rajputana Industries who are doing good by doing some organized business. So we hope with this Rajputana Industries, they will be able to give more boost to this industry, and the work will be done in a more organized manner. Next, please. Next. Now comes the financial review. Next, please. As you see that the company is doing fairly good since last 3 financial years on a regular basis. The company turnover has increased from 244 crores in FY 2022 to 326 crores in FY 2024, leading to increase in the revenue of the company on a consistent basis. Since with the increase in the revenue of the company over the last 3 years, the EBITDA of the company has also been increasing to keep pace with the increase in the revenue. It increased from 11.87 crores in FY 2022 to 18 crores in FY 2024, leading to a gross EBITDA margin of 5.56%, which is very healthy in terms of the metal industry stocks. Similarly, the PAT of the company is also increasing on year-to-year basis. It increased for 2.63 crores in FY 22 to 5.12 crores in FY 2024, keeping pace with the increase in the EBITDA margins and the revenues. So the net profit margin is pretty good, 1.57% for the last financial year, and company with the savings, which I will explain you with the object of the issue, targeting to touch around 2 in next 2 to 3 years down the line. The company balance sheet is also fairly structured, fairly good, with proper combination of debt and equity in the company. The company net worth is 32 crore as of March 2024, and that company has a total of borrowings of around 23 crores, including the borrowing from the bank 19 crores, 4 crores around at DTA liabilities, which however doesn't get crystallize. So effectively, that is long term debt is 19 crore in the company, and which is when we add up the short term borrowings of CC limit 10 crores, the company has an overall borrowing of 29 crores in comparison to net worth of 32 crores. So overall, the company equity is much more than the debt in the company, and company enjoys a debt equity ratio of 0.90, which is quite healthy in this type of trade. Similarly, the company, since dealing into the copper products, aluminum products, which are very high cost, high value, so major part of the company funding is deployed in the working capital in the form of inventories of 82 crores in last FY24 and at debtors of 13 crores. So major fund of the company is deployed in the working capital. So short term, some other funds are also employed in the capex, which I already told you they own the land and building in that. So the company has an equal distribution of the assets and liabilities. The company is also doing fairly good in the business front and revenue generation also. The company cash from operations are positive. Last year they able to generate 17 crores of cash from inflow from operations, which are deployed in the 8 crore by the investments and also by repaying the certain liabilities. I also want to mention that the company in this financial year is setting up a cable plant which will be funded by the company own internal resources and borrowings. No part of the issue proceeds shall be used for financing them, but the company will also now manufacture cable also in addition to the this existing business of converting the scrap into the premium products. With this cable business came into the company fold, the company margins, which I've already told you 1.57, is bound to increase in the current future because this product has a higher better margins. So overall, the company will be benefited by the scrap business plus by the cable business. All the key ratios are on a upward trend, going good numbers because the company is consistent in its performance. The profits are increasing, the revenues are increasing. So therefore, the ratios are also increasing on year-to-year basis. ROEE, ROCE, debt to equity ratio, debt service cover ratio are well within the accepted levels required for any manufacturing company. The liquidity ratios like current ratio, inventory ratio, and EPS are increasing on year-to-year basis. On March 2024, the company EPS is 3.34 per equity shares. And if you consider our price band of 36 to 38, so that 3.34, then we are coming up at a price to earning ratio of 11 pre-money valuation, and post money after this IPO, our P multiple shall be 16, which is quite reasonable in the SME market as of now. Also, the NAV of the company as of March 2024 is 21.25 per equity share, and considering our price band at upper band at 38 rupees, we are offering the share at a very appropriate valuation for this company. The way forward, as I already told you, the company is planning to increase its business scale by taking the fresh funds from the public to meet its working capital requirement and to meet the growing demand of the industry. Also, to set up a cable plant in the company that will increase the margins of the company in near future. So these are the way forwards which company is looking after this IPO. Next, please. Hmm. So this is the all about the company issue which the company should do to open tomorrow. If any other query is required, I am always available to answer them. The issue, one thing which I forgot to mention about the object of the issue. As I told you, the company issue size is 26 crore on a gross margin. If you reduce the pre-IPO placement, the issue size will be 23 crores, and which will be deployed in the following manner. Majorly, 14 crore will be gone into the funding the working capital requirements of the company. Around 4.5 crores will be used by the company to establish a solar panel on their rooftop to reduce the energy consumption in the company via government lines. That will help to reduce the power cost and thereby increasing the margins of the company. The balance amount, leaving aside this 14 crore from the working capital and 4.5 crores for the solar, will be used by the company for meeting the GCP requirements and issue expenses. So friends, this is about the company. I welcome all of you for any questions. Thank you.
Thank you, Ashok sir. Now we will start with the Q&A session. I request all the participants to post their questions in the comment box. Thank you. So first question is from Mr. Pankaj Yadav. Thank you for the detailed information. What is the upcoming ROC, ROE and sales growth expected in financial year 24 and 25? What is pre and post IPO PE?
As I told you, the pre-IPO is 11.35 for this company, and the post-IPO will be around 16 and a half. And what about the coming ROCE and ROC? That the Naseem ji will answer.
For ROC, I can give you the top lines as well as the bottom lines, a tentative approximation. So company is poising to cross over 400, may touch to 450 on top line. And if I keep my percentage around 1.6 as a profit, so you can expect a profit growth of roughly 425. If I say 425 into 1.6, it will be in the range of roughly 7 CR.
Okay. Next question, please. Monil Shah, how do you plan to reduce finance cost and overall borrowings, which seems to be affecting our PAT margins negatively?
Financial cost. So finance cost that the company has is not very high for the bankers. The finance cost is high on the supplier side. The interest that we are paying to the supplier. So whatever money that we are coming raising through this IPO will support us to reduce our cost of finance in terms of our reducing in the financial cost by improving our borrowing powers. And
Actually, what happened? The
overall, no.
company was little short of the working capital.
Hmm.
To fund that gap, the company is coming up with this IPO to raise a working capital. So earlier now
Hmm.
with the limited working capital, the company was discounting the supplier's bill or a customer's bill to raise the funds on a quickly basis. When the ample availability of working capital will be available in the company will stop discounting these bills, and that will help in reducing the finance cost and increasing the PAT margins in future.
Next question, please. MMM, is the OFS or promoter selling?
There is
It
no
is a fresh.
OFS or no promoter selling in the IPO.
Next,
Everything is fresh issue.
okay. Next question, please. Arav Banerjee. How does the company generate revenue from its different product lines?
To summarize the product line, normally we have 11, 12 product line. To elaborate each one of them is practically difficult, but I can tell you in terms of copper, aluminum, and brasses. So copper contributes roughly 50% of our sales. Brasses contribute roughly 20 to 30% of our sales, and remaining goes to the aluminum. So, since the quantity of all three metals are similar in production, but because of the differential price structure, the percentage in top line changes.
Okay. Next question, please. CA Varun Agarwal. Why did the company choose to come up with the IPO and did not take funding from the parent company?
Why did the
This
company choose to?
this answer has the two main reasons for not going to take the funding from the company. First of all, the IPO of the Shera Energy was limited, which is the parent company of Rajputana Industries, was majorly an OFS IPO. The company did an IPO of 45 crores in February 2023, and which is around 35 crores was OFS. Only 10 crores was the fresh funding raising. So as of now, the company Share Energy has never raised a money from the market. It only raised money in 2015 when they issued these shares which were offered in the IPO to the Canara Bank. And further, the company Share Energy itself doing a fairly good. Is as Nasimjit already told you, he's setting up another unit in the Zambia. So company has funded that unit substantially. And itself the company, as I've already communicated via our company announcements, the company is making like 100 crore sales on a monthly basis. So the company funds are tied up in increasing its business. Since Rajputana Industries want to join the wagon to increase the turnover and business, so need the funds. So rather than going to the parent company, it has gone chosen to go to the public and raise the money.
Well said, Ashokji.
Okay. Next question, please. Siddharth Iyer. What is the debtor cycle, number of days? What is the working capital cycle and number of days?
Debtor cycle is roughly around 10 days, and the level of debtors that the company has is approximately 10 crores. Actually, on March it was 13 point something, but on an average, the debtor remains below 10 crores. And the working capital cycle of the company is approximately 90 days.
Next question, please. Meenakshi Gupta. Please explain your business model in solar vertical.
This question is not very clear. What do you mean by solar vertical? Is it relating to our investment into solar, or is it relating to the solar manufacturing?
Let me clear them to Ms. Meenakshi Gupta. We are not into solar manufacturing. We are purely focused on the recycling of the copper and aluminum products. What we are doing, we are buying a solar equipment to be installed in our factory to reduce the power generation. So we are using the solar technology to reduce our power consumption rather than entering into the solar manufacturing business.
And post IPO, we are planning to invest into our cable division, from where we will be making some cables that will be utilized into solar installations. But that share and what the future will be, that is not, we cannot confirm you as of now.
Okay. Next question, please. CA Varun Agarwal. The PAT margin in financial year 24 is only 1.5%. How do you see this margin expanding in 2 to 3 years?
However, the PAT margins of metal industry ranges in a range of roughly 1%. The company in the metal industry grows volumetrically, not in terms of percentage. Second, the operations, as the company's operations are increasing with a PAT margins of roughly 1.2 to 2%, which seems to be good margins for our non-ferrous business. You can see a peer comparison with other players also. Even you can compare with Nupur and Baheti. They are also operating in the similar margins. But expanding into 2 to 3 years beyond our non-ferrous cycles, company is aiming to involve cable manufacturing, which will generate more PAT margins, and that is going to uh, add substantially good to our PAT margins in future. But this will happen after post 25-26, and we expect the margins to come in the range of roughly 5%.
Also, the company at one part is increase its business to get the more margins from our customer. Similarly, to increase the margin, the company is focusing more on reducing the cost of production. So in this series, they are investing into the solar so that their power cost can be reduced, so that margins can be up. So coupled with the reduce in the cost by using solar technology, plus adding new product line of cable in their portfolio, they will be able to raise their PAT margins significantly in 2 to 3 years time frame.
Yeah.
Okay. Next question, please. Anuraksha. How does the company ensure compliance with environmental regulations related to the metal recycling and manufacturing?
We have got all valid license from the pollution department for all our processes, including segregation, washing, cleaning, and our melting divisions. So we have roughly 7 furnaces, and all those furnaces have been approved by the pollution departments. We maintain a good hygiene in terms of melting process. We use only electric as a fuel, not diesel or uh, the furnace oils. So that helps us reducing into our emissions. And whatever acid treatment is done, that we neutralize using the basic media, and only those treated water is disposed into the drainage system. So we have all equipments, and we keep a strict control over the environmental regulations.
Next question, please. Siddhartha, what EBITDA margins we can target to reach in next 3 years?
EBITDA margin that I can target to reach in 3 years is more than will be more than 10 or double figures.
Next question, please. Pankaj Yadav, what are the major clients and what is the client concentration?
All major valve making companies, those are making plumbing valves or the LPG cylinder valves or the valves used for the oxygen cylinders, the tire tube industry, the bullet shell making companies, the architectural brass, the jewelry brass for jerry wire industries, and the brasses used for the zippers. We expertise into EDM wire also, that is suitable for die making appliances. Then all major players of electrical panels and switch gears, where we supply the aluminium bus bars and we supply the copper tubes to all major furnace making companies, those who make the induction furnaces as well as make the arc furnaces.
Okay. Next question, please. Yash Mistry, what margins are expected from cable business?
In cable business, we expect a margin ranging from 18 to 20%.
Next question, please. Jai Bakshi. How much copper would be sourced from Rajputana Industries for cable business?
It will be around 50% of our requirement for the cable division.
Next question, please. Ishita Ahuja. Who are your key competitors in solar segment?
I'm sorry, we are not into solar segment, madam. So you cannot compare us with anyone into solar segment.
Okay. Next question, please. Shruti Bharadwaj. How will we manage waste and byproducts from the cable manufacturing process?
Cable manufacturing process definitely has some waste of plastics that is recycled again in-house, and we make the granules out of it. So this process we will be doing in line with our manufacturing facilities.
Okay. Next question, please. Chaitanya Deshpande. Can you share revenue bifurcation different metal wise?
Madam, I have already shared you the percentage share of copper is roughly 50% of our sales. The brass ranges from 25 to 30% of our sales, and the aluminium from 20 to 25% of our sales.
Next question, please. Minakshi Gupta. Are you in talk with solar panel manufacturing companies for our upcoming production?
Yes, Meenakshi ji, we are definitely in dialogues with the solar making companies, and post IPO, I will be confident to place orders and move ahead with the investment.
Okay. Next question, please. Sudip Shastri. How is the company positioning itself to capitalize on emerging trends in the renewable energy sector, particularly in relation to copper and aluminium products?
Oh, we will be encashing all the avenues for upcoming trends in the renewable energy sector. We are very well placed into the market. Our promoter company is a approved vendor for Power Grid Corporation of India Limited. So we are trying to approach to the railways and get ourselves approved into this segment. So a lot of electrification work is going to happen in near future, and all our diesel locomotives and all those will be replaced with the electrical ones. So huge requirement for the copper strips, for copper tubings, and the special conductor that is for the railways, that is used for carrying the 25 kV power. So we are in this line of action, and we will be doing good to contribute into this sector.
Okay. Next question, please. Sachin Pawar. Please provide more details about the strategic vision for the new cable manufacturing plant.
As I have already apprised you, the strategic vision for this is to focus the market for solar panels, for railways, and submersible cables. So these are three focus area. As submersible cable has two division, one is the winding wire and one is the cable division. Winding wire does not need any ISI certification. So our production will start with the winding wire for submersible motors. Then with the ISI production, we will be targeting more onto the cables. So this is the strategy that we are going to follow for our cable division.
Okay. Next question, please. Cogent Invest. How much cost saving we can expect from the solar project of 3 MW?
Usually, 1 kilowatt of solar saves you energy of roughly 4 units per day. That make it, if you convert into rupee, that makes around 25 rupees every day for 1 kilowatt. So just multiply it by 30,000, that is a saving on a daily basis. And you multiply it by 365, that becomes a saving for the year. But there is a constant here. We have to pay 1.5 rupees more on 2 megawatt power, not on 1 megawatt. 1 megawatt is free, but on 2 megawatt, that will be the charges levied by the government of Rajasthan to against their transmission losses. So net saving will be more than 3 crores per year on roughly.
Okay. Next question, please. Pharma robots. This facility will have anything to do with Zambia expansion, or it will be only in our promoter company as Zambia project is looking promising.
Facility is directly or indirectly connected to the Zambian activity. Since in Zambia we will be procuring the copper blisters and copper ingots and aluminium ingots, which are a basic raw material for Rajputana industry. So the profitability of Rajputana industry is linked with our Zambian operations as well.
Next question, please. Cogent Invest. What is our inward transportation cost and what is our payment cycle to our suppliers?
So inward transportation cost varies in rupees per ton. It is never in percentage. So roughly it comes around 3 rupees to 5 rupees per kg. That makes 3,000 to 5,000 rupees per ton. And when it comes to our payment cycle to our supplier, it varies from terms to terms. Normally it comes from 60 to 90 days.
Next question, please. Connection Network. Good evening, Naseem ji and Holani ji. Vidit Gupta here from Connection Network. Want to know what is our working capital cycle and is there any opportunity to improve our working capital cycle?
Yes, we will be improving our working capital cycle, and as the operations are increasing, presently with this working cycle of 90 days, by end of FY 24-25, I expect it to come down to 77 to 80 days. So every year we will be improving our working capital cycle, and we will be more aggressive and on doing this.
Okay. Next question, please. Farmer Roberts. I think it's first SME IPO with shareholder reservation. Nice work, Olani ji. Till which date shareholders are eligible for applying in this IPO?
The record date for applying this IPO is the date of filing the RHP, which has gone passed away. So as of now, those shareholders of the company who were on the list of company shareholders on Tuesday, yesterday, last week Tuesday, are eligible for applying under the shareholder quota.
Okay. Next question, please. Velani, what is the post money valuation we are expecting and what is dilution done in the IPO?
The post money valuation will be 85 crore rupees on the listing price, on the IPO price, and the dilution will be 33%.
Next question, please.
But not in the IPO 33%. The company already issued 5% equity share earlier before going into the IPO. In the IPO, dilution is around 72%, and with the additional share already diluted by the company, so the net holding shall be 66% to the promoters and 33% to the public.
Okay. Next question, please. Sudeep Shastri, what are the major risks associated with the cable manufacturing industry and how does the company plan to mitigate this risk?
As I have told you, I am not focusing only one division, not only solar. We are going to the railways as well. So one of the segment is 100% going to work, and then backup strategy is with submersible cables. So submersible cable has a vast demand not only in India but across the globe. As the water levels are depleting across the globe, so the pumping stations are normally changing from monoblock sets to submersible. So requirement of these submersible cables are rising substantially. And similarly, as the solar energy is increasing, the installation is increasing, so solar cable will also have a huge demand in this market.
Okay. Next question, please. Valani, at what valuation pre-IPO allotment is done to the investors and their locking period post-listing?
The valuation is same. We have offered our pre-IPO at rupees 38, and similarly we are offering the same in our IPO. So there is no difference in valuation in the pre-IPO allocations or the IPO allocation, first of all. Secondly, the locking for the pre-IPO investors shall be 1 year from the date of listing of our equity shares in the open market. So it will be from 6th of, let's say, we assume our listing will be on 6th of August. So 1 year from the 6th of August 2024, that will be 6th August 2025, will be locking year.
Okay. Next question, please. SK Patel, what is the capacity utilization at present?
For present installation, the capacity utilization is roughly 65%.
Next question, please. Chaitanya Deshpande, wishing you all the best for the IPO.
Thank you, sir.
Sir, I think we have covered majority of questions. Thank you, everyone. Thank you, Naseem sir, and thank you, Ashok sir. All the best for the IPO.
Thank you, everybody.
Thank you, everyone.
Thank you, Vaishnavi.
Thank you.
Bye.
Welcome.
Thank you. It was pleasure replying all your queries, and I wish a very strong support from your side. Thank you.
Thank you, sir.